I'm Eddie Knoell.
And I'm Tom Knoell.
Welcome, everyone. This is our podcast, the Mortgage Brothers Podcast. And today we are bringing to you a question about cash out refinances in this market, in this COVID-19 market.
Yeah, specifically, we're talking cash out refinances literally in the COVID landscape that we're in right now. We're still sheltered in place. Eddie, you and I were in an office that's just about vacant still. And though we've kind of gotten used to it, we're used to the empty streets. The reality is we're still in a very unusual, unpredictable, unknown time. What is the shelter in place for another 2 weeks?
That is a really good question. Doug Ducey, I don't know if it's through April.
Okay, because I thought it was until May 1st.
Okay.
Now we may be wrong about that, so sorry if we are, but that's kind of what we're going off of. So it's the calls we're getting, and we're getting a ton of calls from people about various things, but a lot of them are surrounding the COVID issue on, should I do a cash out? I realize I don't have very much money in my emergency fund right now. I've got to pay off some debt. Should we do cash outs? So, you and I were talking before this podcast, and we're winging it a little bit here, but we thought it was really important to talk about, again, the cash outs in light of the COVID market. And so, Ed, some of the questions, again, that we've gotten is, I know one of them I already said, but should we cash out and use that money for an emergency fund? Should we cash out and actually invest that money?
Well, right. It's one thing to be using the equity in your home to invest in a stock market, right?
Mm-hmm.
So some folks are seeing the stock market right now. The stock market has rebounded. Now it may head back down, but right now the Dow and the S&P 500 are probably off 15 to 20%.
Right.
But they were about 35% at the max, at the very low, and they could go back down. But people are wondering, hey, should I just be buying some stocks?
Yeah. So we're getting questions about pulling money out for emergency funds and about investing. We're also getting questions from people saying interest rates are at near all-time lows. Will the Fed keep dropping interest rates? Why would I do even if I need an emergency fund? Should I wait another month or two? Yeah. So they're asking us, what effect are the Feds going to have on us? And then ultimately, they're saying, are we in certain of enough times to do this? Is it crazy for me to think about doing a refinance?
So let's just start with maybe the first question about let's just take the scenario where a customer calls us, is asking about the stock market. Mm-hmm. I think our advice really is, your home is not, if you're going to take cash out of it and put it in the market, then you are viewing your home and treating it like a stock. You're viewing it like an investment. It's not. Your primary residence should just be the asset that you live in. Do not touch it for investments, speculating. Absolutely not.
Yeah, people will say, well, people call it, one of the biggest wealth builders. Isn't that what I'm doing? And again, you and I, we're not financial planners, but what we're simply doing is we're saying, to identify your home as an investment tool to go into stocks is much different than investing in a home and using the equity that is building to help build your wealth. So I think what we're saying is yes, the home is one of your biggest investments. It will make you grow wealthy, but not by taking money out and putting it into the stock market. So
correct.
And there may be some super brilliant guys that have made a ton of money.
And the millionaires that we're talking about, people say real estate makes people millionaires. They are millionaires because they own the real estate. It's the real estate itself that's worth millions over time.
Yeah, right.
It's the underlying asset is the real estate. Mm-hmm. You're getting lucky, and the thing is if you're leveraging it to go out and buy the stock. So anyway, be very careful. We don't recommend it.
Now, how about on the emergency fund side?
Emergency fund is an interesting question because it in certain cases it can make sense. So let's say that you are in a job right now that's in question whether or not the stability of that job will be there for the future. the near future.
Right. Just don't tell us how unstable it is.
Right.
Yeah.
So if you need the funds to live and to really keep your life as secure as possible, taking care of the staples of your life, the needs, I would say that the cash out refinance does make sense if you're looking
Hmm.
for that 6-month emergency fund.
Right. I mean, I've had borrowers and friends tell me it's not until these days that I've realized just how unprepared I am.
Right.
We just don't have that necessary backup. So, again, we're not big advocates of investing in the stock market with your equity, but using your equity to make your home and your family safer is a good idea.
Yeah, that
Um,
can work.
yeah. So, how about for the person that wants to do the cash out refi and they call us and they say, "Is now the right time?" I mean, interest rates they're near lows. Are they going to keep going down? What do you tell borrowers when they usually call you and ask you about interest rates?
So for the last month, if you would have asked me 30 days ago, I would have given you a different answer, or at least thought that rates were going to fall dramatically. Eh,
Hmm.
Okay, today I'm going to take a more measured response and say I'm not sure that rates will drop much further than they are today. Interest rates are, and let me share a screen because I think it's relevant with this answer right
You
now.
you got a screen already?
I got it ready.
You got it ready. I'll
All
begin.
right.
I thought you were going to produce that later.
So I was going to, but I thought this was relevant right now because I was answering this question. This is the Mortgage News Daily. It's just a good resource. I like it. It's a third party. It takes all these lenders out there that are quoting rates, and it kind of averages them out. And so you can see that today the average rate that was quoted on a 30-year fix was 3.42. Yesterday was 3.44. Of course, this podcast will probably come out the following Tuesday, but the point is you can
Hmm.
see the last 30 days worth of rates.
Hmm.
Okay.
Hmm.
Now, there was a point that these rates were down to like 3% and in very early March. And so now, is now a good time to refinance? The answer is yes, because I think even like right now we're quoting around 3.25 to 3.375. But anyway, at the time that this podcast that you're listening to this podcast or seeing it, just reach out to us to see where rates really are. But I do think that today is a good time to refinance because we're seeing a ton of support. I should say, and what I mean by that by support is a lot of interest. A lot of people are looking at refinancing when these rates are right at this mark, at 3.25 to anything above, a little bit above 3. We're getting a ton of demand for it. Okay,
Okay.
banks do not need to lower these rates much further.
Right. And if we go back, 2, 3 weeks ago, kind of at the beginning of COVID, we had interest rate spikes of over 1% or 2. I mean, we had some banks that were quoting a whole 1.5%. So
Yes.
also what we've been having to consider while we're advising our clients is, again, unfortunately, we don't have the crystal ball. I used to actually have one, but then it broke.
It broke.
But it's just very difficult because there's so many different factors. When the treasuries were dropping and when the feds were cutting, guess what interest rates were doing? They were going up because they were artificially being pushed up because of the concerns of COVID, but also the sheer volume and pipeline overload. So okay, so interest rate wise, this is a good time to be doing it. I mean,
Yes.
it's near historic lows. It is interesting. We do hear ads where we're at historic lows. That's actually not the case. We're not at historic lows. We are very close to historic lows, but we're not at historic lows. So I think that's a little gimmicky. You hear something that it talks about it. I think they're just hoping to get that 10 or 20% that really don't know what's going on.
Mm-hmm.
And they really think, well, COVID does mean they are at historic lows. The answer is no, they're not. This is not the low.
Right.
So, but very, very close. So, a pretty easy decision. If the timing works out for you, it's probably not worth the risk of waiting another 30 to 60 days to see if they squeak down a little bit. Because if they do, it'll be incremental. It'll be tiny, maybe an eighth of a
Yeah.
percent.
Yeah. So lenders are busy. Banks are very busy right now. So if you are interested in refinance, the process is a little different today. Well, a bit different today. So contact us and we'll give you the steps on how to get in line for the refinance and how it works.
Yeah, got it.
And
Okay, and then lastly, it's kind of the big one, and it's kind of overarching and maybe even too difficult to answer in this podcast. But it's, what's going on in the marketplace right now in terms of home values. Are home values going to drop? Are they going to fall off a cliff? What were some of the other ones? Will the
But
job
if
market crash?
right.
We get those questions as to whether or not this is a good time to be
Yeah. Yeah.
refinancing.
And then
What
people
what
people always people have been asking, what about the Fed rate and all?
Okay, but one of the big, maybe to simplify it, is in terms of home values and overall, economics. I mean, home values right now, we're not really seeing a big shift in home values. We're getting appraisals back,
Yeah.
at almost target price. And one of the things I tell people is that we're not far enough into it yet.
Yes, it is too early. It is right now. We are in the middle of April. Again, this podcast will come out probably towards the April 20th or so. But the point is that we will probably see an effect. If we do see an effect, we're going to see it in June, July, August. We don't know. And
Hmm.
if people again get back to work, and we have get back to a sense of normal as possible,
Hmm.
sense of normalcy, then and again, demand was so strong in January, February, March, that and then supply was so low. There were so many buyers, for every home that was listed, that we think that, yes, there will be, I think, potentially less appreciation. Maybe
Hmm.
even in some neighborhoods, some depreciation over the coming months. We don't know.
Yeah.
Too early.
Right, right. The market, yeah, it's been very interesting. It seems like when we get a call on a contract falling out, another one steps right into its place. So
Hmm.
even though there are some people that are concerned enough, I've had a couple of second home contracts back out. But for purchases, they're moving from Iowa, they're moving from Washington State. They're getting hired by Raytheon, and they're getting hired by Roche and all these different companies. Like, they need to move. They need to go into
Right.
homes. So we're
Right.
still seeing some activity. We'd love to have a realtor on, and just to kind of get the boots on the ground, data in terms of volume and whatnot. But overall, home pricing is not a concern right now that we're seeing, and shouldn't really over affect someone's decision on a cash out refi.
Yes, there are, and again, if we showed you numbers, there are resources out there that can show us numbers of what the median median house price is, what the supply and demand is. There's a report called the Cromford Report. There's all sorts of things out there, but there's so much disagreement about numbers sometimes, that, or at least the interpretation of those numbers.
Hmm.
And,
Okay.
and again, this is not normal. This is not 2000. And some people say, well, this is just like 2005, 6, 7. That's not the case. This thing could be over very quick, but at the same time, you can make the argument for both.
Yeah. Right. Yeah. Yeah. We're in a medical pandemic. We're not in
Mhm.
an economic meltdown.
Yeah.
So the pandemic can have effects on the economy, but right now it's just strictly limited to the medical side.
So tying this into this whole topic of, is now a good time to refinance and take some cash out? If you are a good candidate to take cash out, today is a good time. I mean, why not do it now instead of waiting, until later, when potentially that we might have lower values? Not a
Hmm.
lot lower, but just might be lower.
Yeah.
Maximize your loan, maximize your cash out, your loan to value, so you can have a highest. Right now would be a good time to do that.
Yeah, yeah. So home values are still known right now, and again, we anticipate they're going to stay the same for the majority of our anticipation. But home values are going to be good, as long as you are at a good rate. Which right now we're at a good rate. It'd be nice to be able to fund that emergency fund.
Yeah.
So there's really, I was going to ask you, as be good, as long as you, are at a good rate, which right now we're at a good rate. It'd be nice to be able to, fund that emergency fund.
Yeah.
So there's really,
Just looking to refinance. You're saying taking cash out or no?
well, I guess either or, but for the cash out, let's say she's a little worried,
Yeah.
and wants to have a little emergency fund. Would you do it now, or would you wait 6 months?
Yeah. I would rationalize it in this way. If it would be a good idea, if I wasn't raising her interest rate
Hmm.
and I was creating an emergency fund for her.
Yeah. Yeah, if you weren't raising the
Yeah.
interest rate, possibly lowering the payment,
Yeah.
and funding an emergency fund.
Yeah.
There's no reason to wait. I mean, that's one of the reasons why the home is there.
Now, I would not go out and sell. I would not go out there and try to convince people, hey, I'm going to give you this an interest rate. I'm not trying to scare people to go out and get an emergency fund and do cash out refinances, because each person will have a different response. Like, some people just are really scared right now. Others aren't. So if you're not the one who's panic, or if you're not panicking or you're not worried, that's great. You should. But if you're anxious and you're not really sure and you really want that emergency fund, I'm not going to stop you. I'm not going to tell you it's a bad idea either. It is, could be a good idea.
Right.
If you have that sleep factor.
We've also talked about, speaking of sleep factor, the debt consolidation. People with high credit cards in a time like this, especially potentially putting money on credit cards. Now is a good time as well to consolidate some of that debt and get out of that high interest that high interest rate credit card debt. So for funding an emergency fund, for getting out of the high auto loan interest rates, or getting out of the high credit card interest rate debts, the cash out does make sense. The only asterisk we really put out there is don't do it just because you're bored, and don't turn your home into a brokerage account. That your home needs to be safe.
That's right. Everybody in the family is depending on you to make that good decision.
Yeah. So I think that's it. What
Yes.
do you think? Anything that?
I think that we can, I think that as far as cash out refinances and in this crazy market, I think that we've kind of covered a lot of those questions that we get.
Yeah. And again, very, very reasonable questions. We do loans all day long. And so all we're thinking is exactly what's in our thoughts, which is, people are calling interested in doing refis. But we don't know about those people sitting home and they're sitting there scratching their heads thinking, am I crazy to be thinking about a refi?
Yeah.
And that was the whole point. We're sheltered in place. We're cooped up. We're concerned potentially about, not having this or that. And we just thought it'd be important to let you know that you are definitely not crazy thinking about a refi. I saw a brand new car drive by this morning on the way to work. It had a 2020 license plate, like paper license plate, like flopping around, pop, 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 pop. And I'm thinking, they probably got suckered into some deal where they got like an extra $2,000 off MSRP.
Yeah,
and
right.
Like,
the dealership just gave them
smoking deal.
Awesome deal.
That a refi is totally, separate from something like that. So we are advocates of doing the cash refi, not just because it's our business, but because we look out for our clients.
So everybody, we try to do this every week. So make sure to subscribe to this channel if you're on YouTube. And again, you'll be notified when we have new podcast episodes. And contact us, call us, email us with any questions you have. We'll be happy to help.
Okay. Well, everyone, stay safe out there. We'll be through the sheltered in place, hopefully, God willing, here soon. And stay optimistic. We're seeing a lot of bright indicators out there. We're not quite through the woods yet, but we definitely see enough of the optimistic indicators out there to be hopeful.
Yeah.
All right.
Everybody, have a good week. Hey guys, thanks for listening to the Mortgage Brothers Show. Please let us know if you have any questions you'd like us to answer on this podcast. You can email your questions to tom@azmortgagebrothers.com or yours truly at eddie@azmortgagebrothers.com. And be sure to ask us for a free quote on your next mortgage. Tom and I will personally work with you and help you through the whole process. Signature Home Loans, LLC does not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Signature Home Loans, NMLS 1007154, NMLS number 210917, and 1618695, Equal Housing Lender.